So we're waiting here to start this review session for Module 11, and I'm here with Crossroads and Pantelis. Thanks, guys. As we wait, I want to make a review here of this P500. As you know, we are in the middle of the storm here. So Gary was asking where did I get these two anchors here, the two levels, these two levels here? Is that the question? Yes. Okay. Yeah, I don't hear you very a lot, Gary. Can you? Is there a way you can increase your volume or on your side? So these are the two levels, right? Okay. So how did I get these two levels? Let me see. Yeah, just a little bit better. Yeah, still, but that's okay. So how did we get to these levels? First of all, as usual, we wanna look at the sequence, right? Because in the end, these levels do not come out of nowhere. They have now the in 2009, for some reason, the start of the sequence was this low after this big move higher. There was this low, and then that's what we saw, right? First measured move to first target. The market came back, same anchor. I wanna start from scratch here, from the very beginning, so we know how we can justify these levels. And then the price went into the first and second target. Okay, the price never looked back from that point on. Okay, so if we try to if we try to use the same anchor here, if we apply rules, we know that that was a jumping extension. Okay, so we find that extension after the fact. Okay, and we discovered that if I remember well, that extension at the time I used this one, this level here, right? And so I remove the previous one, and then we actually, so I see other people coming in here. So that's Mike and Vu. So let me continue this, and then so so we had this extension, highs to new highs. The price it traded in to the first target and second target, and here we had this level here. Now the beauty of this level here, which kept working as we go, right? Can you see here there are three levels? But before I do that, if we go back in time, what is that high? That high is also the that high there is also the high of 2000s. Okay, so this is a very important level because we know that these levels they come into play as an aggressive traces as soon as the first target of the larger move, which was from 0 to here or here, from 0 to this level here. This was the let me change the parameters here. I know I'm not confusing you. I'm trying to explain you the full picture here because this is very important, okay? Because otherwise we cannot, we need to weight the importance of those levels as well. Now this 783 was the level that captured also the lows in 2009. Okay, now we don't see that here just because this is the way the adjusted continuous price for futures is calculated. But the low was a 667 or 666. Someone was having fun there. All right, so this level here that I'm using, that is justified by price, it is also the high of the 2000. Okay, so this is very important. I'll show you why now. In any case, even if we don't consider that, if we go back to this level, right? What did we see here? The extension, the jumping extension that we identify after the fact to justify this price. The market went higher into first target and second target, and then there was this 2014 October low here, and we just apply rules. Okay, highs to whatever new highs we had here, and this held. And I always tell the story here. I remember that time, that was the first time I presented the Money Show, And I went to watch another colleague, Canadian colleague, and he was all worried because, I think we were around this. He saw the first week market moving down, and he had already lined up on his fund. So this guy, he managed, I believe, 20 million, something like that. Not a lot of money. So I was in the room, and he asked, who does know where the market is going? And I was the only one raising my hands, and everybody was laughing, of course, right? I said, look, I mean, I think we are in an extension long, and that's the only thing that I could say because everybody was laughing and he disregarded me. Okay, but this market participated at this level, and then sorry, the level was not this one, was the October level. Okay, it was highs to whatever new highs was printed here, and this was the level. Okay, so we were around here, everybody was panicking, and he asked me what the market is. What do you think the market is going to do? Now, who knows what the market is going to do? I said, well, I mean, I believe we are in an extension long, and eventually the market is going to bounce. And I just don't want to boast about that, but it was very funny that everybody was laughing, and they really don't understand the price, the structure in price. So this brought price into that first target. The next measured move, same anchor, new highs. We apply same rules here. And I think I'm doing a review that can be useful for Mike as well. Mike is a new joiner. Welcome, Mike. This session here is module 11 for session 6. So you're free to stay, Mike, but probably if we do the review, it's not going to make a lot of sense. But for now, I'm just doing the review for the SP500, okay? So how do we justify these levels here? We will get there. Just let me continue here. So Gary, I don't know if you were trading at this time, 2015, 2016, but the the same anchor that I showed you justified this level, and now the market started accelerating here and went into the first and second target and then continued higher. But as you know, every time we have a move higher, we also have structure within. Okay, so in this move higher here, there are also extensions. Okay, so there are also inner moves. This is the first one, bringing price to that first target, as you can see here. Same anchor, new one, new high, sorry, as captured, of course, the next measure move. Same anchor, new high after hitting that first target. Guys, tell me if I'm too fast, but I'm just applying the basic rules as you know them, as I teach them in module 1. And this market kept participating here. And then, I mean, there was that incredible acceleration that we have seen since basically before, especially since the Trump's election, okay? And believe it or not, my long-term holding, I exited them around here in March, okay? And that's it. Look at how much I've lost. Am I worried about that? No, because I didn't know, where this market could go. Well, we had 22500, okay, and that was the second target. So I could have held for another, 100 points. But to be honest with you, I'm not. I want to remove. I try to remove. I try to remove my risk as soon as possible in the market. Okay, so we had these two extension longs, and now the when we start seeing this move lower, it was very logical to trace the highs to new highs, and look at where the market stopped, right? Just because that was the next measure move in this long sequence here. Okay, now we also have the previous measure move, which is this one, the largest one, and the other level simply comes from the outer measure move highs to new highs. Okay, so this is how I came, Gary. Does this answer your question? I can remove this now. So this is how I came with the two levels. The first one, respected to the pip. You have the same. Very good. Very nice. I'm happy to know that. If you want to speak, you are unmuted, otherwise not a problem. But okay, so what we're seeing now, it's a double top, right? Sorry, a double bottom on top of this 25, 27. And typically, as I was saying before, when this happens, it happened here 2016, it happened, when we have these kind of W bottoms, it happened, before as well. And if you go back in history, you see this kind of, we have a V bottom, which is only one dip into lows, and then the market recovers. But if the market does not recover right away and it puts a double bottom, this is usually a strong signal. Okay. Now, what can happen? As you can see here, printing new 4-hour highs here. So what can happen now is that we could really see previous highs. Okay. And from a from a FibStalker modeling point of view, what we have here, we have a larger setup long, we have a smaller setup short that was capable of pushing this price lower for a second test, and that second test was successful. Okay, so bears here have no business. They have no business at the moment because clearly this level was defended, and there is no way around that. So at the moment, the most we can say is that this market is actually moving. It is actually moving between these two areas, support and resistance, support and resistance. Now, the point that I make here is that the support comes from a larger time frame, okay? And so we anticipate a possible a move higher and actually a printing new high. So I have some other questions there. Let me see. So we have half month ahead waiting. All right, that was Pantalis. It is fantastic results. I'm going to talk that in a minute here. So Grosso is saying you have the same levels. That's good. Have an interesting yearly chart from the 1929 lows on log scale. So you can see the bottom part if you want to see. Yeah, I think I have that as well. Let me just let me find it, and because this is an article I wrote a couple of months ago, and it was published on the CSTA journal, the Journal of the Canadian Society of Tech Analysts. And if you want to get a copy, I'm very happy to share that as well. And I want to share some other considerations as well. And let's see. So right, so I found it, the CSTA journal, and I think you can. Let me see, you should be able to see it now. And the reason why I want to show this article is because there are other scenarios as well. Okay, so I call this intermediate and long-term scenario for the U.S. equity markets. All right, so and I have that long-term consideration on the 1987 market crash, because obviously, the more we continue and the more the market moves higher, the more those conditions are actually created. So welcome, Robert, as well. So I'm going to finish this section here, and then we'll start with the actual material. Okay, Robert, what we are doing, we are reviewing the SP500, considering what could happen here. Now, this is the crash, 1987 crash, and what happened there is that the market traded the high to whatever new high was traded there. Okay, now The observation that is important is that um, before putting that high, okay, the stock market before putting that this high here in 1987 before the crash, the market hit, of course, the first and second target of that 50% measure move. Okay, so we are in the similar situation. Now, whenever I do this kind of consideration, I never assume the market is going to behave the same way. However, what I wanna just do some observation. Okay, so the market before getting to this tipping point here went 24% above its second target, okay, of the previous measure move. If currently the SP500 is bottoming up and starting another move higher, um, if let's say the same, and we can never make the same assumptions, right? But let's say if the market at the moment would go 54% above that second target, right? That would bring the SP500 into the 38. I think I have it here. The level will bring that level in the 3800. Okay. If the market were to move another 54% above the second target. What is the second target I'm talking about? It is the second target of the whole 50% move from 2003 and 2009 lows, and we know that that second target was at 2500. Let me show you it again. When we put zeros here, there was a full, in 2003 and 2009, we had a full 50%. You don't see it now because of the way the futures contract is calculated. But the first target was 1918, now it's 1942. The second target was that 2540. So this market went already above that second target. If it goes 54% above this level, as it did in 1987 or in the years before building into the 1987 climax, this would be a 54% move, and this would bring price to 3800. Am I saying that the market will go to 3800? No, nobody knows what the market is going to do. But if this market keeps moving higher, it is going to be it is going to be it might go much higher, preparing the climax there. Now remember that let me just show this to you. This is another model I want to use. Remember that topping is always a process. Okay, it's never a point in time. And if we go back, I only have in here my last 20, 25 years of data. But every time we get a top, can you see what happens there in the process? The market has to go down, has to test one of your choice moving average. I use the 90 weighted moving average, but you can use any. I mean, people who are kind of orthodox on moving average forget the moving average only capture the trend with a delay, and you can use any, but I like to use this one. And so it's a process. It has to go down and then retest that level, and that moving average, whatever you have, has to start working as resistance. Okay, so we need to get all these rotation here that is going to take months, right? So topping in a market is never a process. In 2000s, the same thing happened. Make no mistake. We need to get that rotation. Whatever you use, we need to get that rotation. So let's say that we saw the equivalent of this now. I don't know if it is the equivalent of this, okay? But this was a very strong sell here. This is a weekly time frame. So this market, if you're gonna see this market, um, uh, kind of poofing on top of whatever moving average you wanna use, then when it breaks, you can kiss goodbye this market. And of course, this market is gonna come back, right? And it's gonna trade 50% traces because the SP500 likes doing that. For example, here. So it's not that when it's gone, it's gone. No, there'll be opportunities to capture it. There were opportunities even in 2008. In 2007, 2008. The market came back a number of times. Came back here, came back here. And look at this double bottom here as well. It's not that similar to what we're seeing at the moment. So, but still here we were below whatever moving average you want to use to model your trend, and at the moment we're still above. We're still possibly in this area. We don't know. Okay, so nothing to panic, and I think we're gonna see 1 or 2 weeks of moves higher, and this market could even print higher highs. Does that make sense? Any questions? Now, before you go, Pantelis has given me permission to share the results he had on the E-mini futures trading the last 2 weeks, and I want to share that for everybody because I think it's a great, it's a good result. So I congratulated Pantelis. You're talking about almost 30%, actually 30% the profit here in 2 weeks on a 150K capital. And as you can see here, 50,800 in gains with 7,000 lost. And Pantelis has a style, he likes trading on the smaller time frame, and he uses timing on the 1 minute time frame. So he uses the FibStalker timing, and uses risk-free trading. It's a technique that it's very short-term trading. But as you can see, this week, especially in the last 2 weeks where we had very good volatility in the market, he got this result. So help me congratulate Pantelis for this result. Pantelis came to me, I think back in September 2014 for help to actually undig him from a very unpleasant situation. I think we can share this, Pantelis, because we have shared this in the coaching a number of times. And Pantelis had the initiative, the courage, and also the the humbleness of coming and say, I'm in a big uh, situation here, very difficult situation. Can you help me? And it's definitely our Greek hero here, as Robert is suggesting. And I remember at that time I created a small video for him, and I helped him, limiting the losses. Unfortunately, he actually entered respecting what would be his future style. He entered a trade short on a very small time frame, not knowing that the larger time frame was in a long. Okay, so needless to say, I'm very proud of what Pantelis has achieved in the last 3 years, 2 to 3 years. And this is an example of someone who, never let the guard down. Never. I mean, I think Pantelis has lost very few coaching sessions. I mean, he has been always here, always improving himself, asking a lot of questions, and eventually, he found the success in the niche that he likes to trade as well. It's not everybody is I wouldn't do what Pantelis does. I mean, I'm not able to do that. I don't trade on very small time frames. I could trade on the 4-hour daily time frames. So let me, help me congratulating Pantelis, very well done, and Pantelis, keep it going, and we want to hear of your results at the end of the month. Okay, this is going to be an incredible month for you. So congrats and keep the good job. And I'm very happy that I had a little small part in helping you achieving these results. Okay, so I'm gonna stop the recording now, and we will start with the actual review. I'm gonna be quick and only give you the relevant information in this recording. You will find also the analysis for those of you who have joined later, the analysis of what's going on in the SP500. So Ian, for you, if you wanna watch the recording later on. Okay, so thanks for watching, and I'm going to stop this first part here. Thank you.